Bitcoin $200,000 by 2026. Here's what on-chain data reveals. Good morning, guys. It's me. So yesterday, I shared this stock-to-flow model, which shows that Bitcoin could indeed hit $200,000 by 2026. And there were some concerns about how accurate this model is, especially since it deviates from the original one. But actually, if you dig into the data, this model seems to be pretty accurate so far and does a better job explaining the market than the original one. As many of you already know, the stock-to-flow model was created by Plan B, who accurately predicted Bitcoin hitting $1 million by 2025. However, he recently admitted that his model was wrong because Bitcoin did not follow its path after the third halving. And if someone were to buy those coins today for $48,000, then that person would have an unrealized profit of $18,000. So basically, the realized price is the actual cost basis of all coins in circulation. And this is an important distinction because it tells us whether people are buying or selling their coins at a loss. This is the original model. As you can see, the price action should have followed this blue line but obviously didn't. And if we look at the previous cycle, we can see that the realized price also went up by 58% from the previous cycle low. Of course, this is just a very rough estimate based on the previous cycle. But it is still very interesting to see how the realized price could play out over the next few years. Well, the conclusion is that the realized price is a very important metric to look at when trying to determine whether people are buying the dip, because it takes into account the actual cost basis of all coins in circulation. Well, that is because the realized price is a slow-moving average, because it takes into account all coins that have been moved or spent. And this is why the adjusted stock-to-flow model is a better model than the original one, because it takes into account the actual cost basis of all coins in circulation and fits the price action almost perfectly. And if you really want to dive deep into the world of crypto, make sure to check out Crypto Island on Bybit. And since most coins haven't been moved or spent since the last Bitcoin bear market low, the realized price is still catching up to the actual price. And when we look at the model, we can see that it fits the price action almost perfectly. And if the realized price keeps going up, then it is a good sign that Bitcoin could continue to go up in price. However, it is still very interesting to see how the realized price could play out over the next few years and what it means for the future of Bitcoin. Additionally, if we look at the SOPR, we can see that it is still above 1, which means that people are still buying their coins at a loss. And if that continues, then it is a good sign that Bitcoin could continue to go up in price. And if we extend this trend line, we can see that it is very close to the current price action, which suggests that the realized price will continue to go up by another 58%. If we take a look at the SOPR, which is the spent output profit ratio, we can see that it has been consistently above 1 since the last Bitcoin bear market low, which means that people are buying their coins at a loss. And this is further confirmed by the fact that the realized price has been going up since then. If we do that, we will get to $195,000, which is very close to $200,000. And if we annualize this growth rate, we will get 22% per year, which is almost exactly the same as the 21% per year growth rate of the monetary supply. And when the price dropped to below $30,000, many of them panicked, sold their coins at a loss. So people are clearly buying their coins at a loss, which is bullish. We can also see that the realized price has been going up since the last Bitcoin bear market low. So people are clearly buying their coins at a loss, which is bullish. So the question is, how much longer can this last? Well, if history is any indication, then we could see Bitcoin hitting $200,000 by 2026. The main difference between the stock-to-flow model and the adjusted one is that the adjusted model incorporates the realized price instead of the actual price. And the reason for that is simple. The realized price is a better representation of the actual cost basis of all coins in circulation. In contrast, miners continued to accumulate their coins because they didn't have to sell. They were still making money by mining and saw the drop in price as an opportunity to buy more Bitcoin. So if the realized price keeps going up, it means that people are buying their coins at a loss, which is bullish. And if the realized price keeps going down, it means that people are buying their coins at a profit, which is bearish. And the main reason for that is a simple change in the model. That is adjusting for the realized price. But before we get into all of that, I want to share an amazing platform that gives you insights into the world of crypto like nothing else. They are sponsoring today's video and have just launched a new feature called Crypto Island. Crypto Island is a free-to-play game built on the BNB chain where users can explore different lands, interact with characters, and complete quests to learn about crypto. And the main difference between these two models is that the adjusted one incorporates realized price. But what is realized price and why is it important? Well, the realized price is the price at which coins are actually being moved or spent. And this metric is very important because it represents the average price that miners paid for their coins. And miners are the ones that need to sell their coins at a profit in order to stay in business. The more you play, the more you earn. You will get rewarded with CGPT points while completing quests. These points can then be exchanged for exclusive NFTs, mystery boxers, and even real-world prizes. Now, if you're not into playing games, don't worry. They have just released their mobile app, which allows you to SLI buy crypto on the go. So let's get back to work. However, you might have noticed another line in my video, and that is the adjusted one in green, which matches the price action almost perfectly. For example, if all coins were bought at $30,000, then the realized price would also be $30,000. For example, during the last Bitcoin bear market, many people bought their coins at the peak, around $69,000. And when we look at the realized price chart, we can see that it has been consistently going up since the last Bitcoin bear market low. And when we use the realized price in the stock-to-flow model, it fits the price action perfectly. To explain, since the last Bitcoin bear market low, the realized price has gone up by 58%. In other words, the realized price could continue to go up by 22% per year until it reaches the point where the monetary supply growth rate drops below 22%, which is expected to happen sometime in 2026. But wait, there's more. So what is the conclusion here? This is why the stock-to-flow model that incorporates the realized price is a better model than the original one. However, you might be wondering why the realized price is lagging behind the actual price. And when we look at the realized price chart, we can see that it is still catching up to the actual price. Now, it is important to note that this is not financial advice, and that you should always do your own research before making any investment decisions. If you enjoyed this video, make sure to check out my previous video where I shared the stock-to-flow model that predicts Bitcoin hitting $200,000 by 2026. Thank you guys for watching, and I'll see you in the next video.